Happy New Year, everyone, and welcome back. I know it's not in person, that's what we would like, and hopefully this won't be too long. What I'd like to do to start with is just explain how the lessons are going to work this time, a wee bit different from when we were in lockdown before. I am going to talk you through each of the slides and explain what everything means. Also, when you have your lesson time, there will be a business teacher available to answer any questions if you get stuck with the task. On a Wednesday morning, that's going to be me, and on a Thursday morning, it's going to be one of the other business teachers. So let's get started. What you're going to have is we're going to work through a range of slides, and then we're going to complete a task in the first part of the lesson. Then you're going to have your break, and then we're going to complete a case study after that. The reason that we've put in a case study is so that we can continue to consolidate all the work that we've done before and add in new questions for finance. In this lesson, we are going to introduce the finance department. We're going to look at the sort of things that the finance department would do. We are going to look at sources of finance that different businesses can use in order to raise money and the advantages and disadvantages of each of these sources of finance. No matter what size of business you are, it's absolutely essential that you manage your money effectively. All businesses have to be in a position to be able to pay their bills. If they're not efficient in the management of their money, then they're not going to make a profit, regardless of what type of business that is. Staff who work with finance will have a wide range of tasks to do, but on this slide gives you some examples of the main jobs that a member of staff would do working with finance. For example, paying wages to employees, paying bills, as we mentioned earlier in the previous slide. And the other thing they do is they maintain financial records. And two of these types of records we're going to look at in later lessons: cash budgets and profit statements. All businesses need money, whether they're just starting out, whether they maybe will need to buy a new asset like a van, or just to survive on a day-to-day basis. Here are some examples of different sources of finance that we're going to look at in a wee bit more detail in the next few slides. If you're a new business starting out, there are a number of organisations that can help you not only raise money through grants or other forms, but they'll also give you advice with regards to training staff. They'll give you advice on how to get to know your market, etc. And these are some examples here on this slide. A bank loan is usually when businesses borrow money from an organisation like a bank. With a bank loan, you will pay it back, you agree an amount, you'll pay it back in monthly instalments normally, plus interest. Interest is the extra money that the bank charges you for lending you the money in the first place. Now, the main advantages of a bank loan is that you can plan. It helps you budget and plan because you don't have to pay out large amounts of money up front, that you can buy something expensive and then pay up over time. But the disadvantages is the interest that they charge. And for some businesses, they can find that difficult, especially if they're struggling financially. Now, a bank overdraft is basically when the bank allows you to spend money that you don't have in your account. When you would organise an overdraft, you would agree a certain time with the bank, for example, 3 months, and after that 3 months period is over, you've got to pay it back in full. Now, the main advantages of that, it can help solve short-term cash flow problems. For example, if you're a business and you have got a big order, you need to get out, but you know in a couple of months' time you're going to receive all the sales and the money from that order, then an overdraft might be something that you would want to use. But the downside of an overdraft is it's very expensive. Interest is charged usually in a daily rate, and therefore it costs a business a lot of money. So it's not the sort of thing that you would want to do for a long period of time. A mortgage is similar to a bank loan in that you borrow money from usually a bank or a building society and pay it back in instalments. What makes a mortgage different is it is a loan designed specifically for property or buying land, and it's usually over a very long period of time, for example 20, 30 years. The main advantages of a mortgage is that it allows you to budget like a bank loan, as you pay usually back monthly instalments, and the interest rates tend to be a bit lower. However, the downside is that you are charged interest rates, and it can cost you money for borrowing that money from the bank. Businesses can apply for government grants. This is basically when you receive a payment from the government and you don't have to pay it back. So there's a benefit there. However, to get a grant, you usually have to meet certain conditions. So for example, if there's an area where there's a lot of unemployment, you could apply for a grant, but the condition of that grant might be that you employ local people in order to help with that social issue. So grants can be quite difficult to get, but obviously can really help businesses if they're awarded. Leasing is quite a common way of renting vehicles and equipment nowadays. Basically how this works is that the business that you lease from will give you, say for example, a company van. You will keep that van for a certain period of time and pay them a monthly payment in order to use the van. The advantages are that you don't have to pay out large amounts of money in order to buy equipment and vehicles, and you would have monthly instalments to pay, but the downside of it is that you would never actually own the vehicle because you have to give it back at the end of the period of the lease. But it is a very popular way that businesses buy these assets nowadays. This source of raising money, owner savings, is quite popular with smaller businesses, but you wouldn't normally use this source of finance for larger organisations like private limited companies. The benefit is that you obviously don't have to borrow from banks or building societies, which means you don't have any interest to pay, but the downside is once you've invested money in the business, it could be quite difficult to get it back. But it is a way that owners do raise money for their businesses, particularly if they're small. Selling shares is a source of finance available to owners of private limited companies. This is when shareholders can sell some of their shares, which is a way of raising money. The main advantage of this is that they can raise money without having to pay it back. It is also quite a good way of raising large amounts of money. But the downside is for the business is that the shareholders could lose some control as they're having to introduce new shareholders, which means dividends, profits and things like that have to be shared amongst more people. So there is pros and cons either way. Now we're going to complete a task. What you're going to do is you're going to describe. Remember, the command word describe means a detailed description, and that means we're looking for at least a sentence for each type of finance, source of finance available, with a different source for each one. So for example, the source of finance you choose for a sole trader has got to be different from a partnership, and so on. For each source of finance, also, I would like you to give one advantage and one disadvantage of each. And when you've completed the task, then please send it to your teacher. Once you've had your break, then I would like you to start the case study. Before you start the case study, make sure that you have your course notes with you, whether it's a hard copy that you were issued with in class, or whether you're using the electronic version, which is on Teams. Remember, a case study covers all the topics that we've done so far, and the reason that we're doing this is order that you don't forget what we've taught you already and that you get to consolidate your learning as well as adding in the new learning that we've done this morning. When you've completed your case study, please send it to your teacher in whatever format it suits you, email or through Show My Homework, and make sure that you answer all the questions. When you're approaching the case study, make sure you check the command word and you apply the command word, look at the marks allocated for each question and make sure that you write enough for each of these marks, and also remind yourself of what topic it's covering. And you would get I want you to use your notes. Do not do this as if it's a test. Once you've completed all the tasks and worked through all the slides, and feel free to go over them again if you feel that that would help, you should by the end of this be able to Outline briefly what the finance department does. Remember, outline is a short description. You should be able to describe in detail with advantages and disadvantages each source of finance, but also be able to match up sources of finance with different types of organisation. For example, a sole trader, what's the most likely type of finance they would want, as opposed to a private limited company, which is a bit bigger, or a company in the third sector, for example, who may be applying for a grant. So you should be able to differentiate between all of these. If there is anything that you do not understand, then please ask the teacher who is on call when you've got this lesson. So that's a Wednesday morning me, and it will be on Teams Live. I will be there for MD to ask me any questions, and on a Thursday morning it will be one of the other business teachers. Okay, you know where we are if you need us.